Hey there. Welcome back to our channel, your go-to place for all things finance. In today's video, we're diving into the lucrative world of dividend stocks.
If you're looking for a method of investing that combines steady income, potential for growth, and the thrill of the stock market, you'll want to stick around for this.
Dividend stocks are the superheroes of the investing world. Not only can they provide you with a regular income stream, but they're also an excellent way to grow your wealth over time.
Investing in these types of stocks could mean you earn money while you sleep. But remember, the world of finance is not without its risks. I am not a financial advisor. These videos are for educational purposes only. Investing of any kind involves risk. While it is possible to minimize the risk, your investments are solely your responsibility. It is imperative that you conduct your own research. I am merely sharing my opinion with no guarantee of gains or losses on investments.
Now, let's uncover the benefits of investing in dividend stocks. In today's video, we'll explore
1. Understanding dividend stocks. 2. The power of compound interest. 3. Diversification in dividend stocks. 4. The stability and predictability of dividends. 5. Tax benefits of dividend investing. 6. Potential for capital appreciation. 7. The magic of dividend reinvestment plans, DRIPs. Trust me, you don't want to miss this one. So buckle up and let's get started on this exciting journey into the world of dividend stocks. Let's take a moment to unravel the concept of dividend stocks. Imagine you are at a candy store and instead of just buying a single candy bar, you buy a piece of the store itself. As the store sells more and more candy, they share some of the profits with you, the part owner. That's essentially how dividend stocks work. When you purchase a dividend stock, you're buying a piece of a company.
As the company makes a profit, it shares some of that money with you as a shareholder in the form of dividend.
Dividends are like little thank you notes from the company for investing in them. It's like getting a steady paycheck simply for owning a piece of a business. Pretty sweet deal, right?
But remember, not all companies distribute dividends.
Generally, well-established companies that have a consistent record of making a profit are the ones that distribute dividends. It's their way of distributing a portion of their success back to the people who believed in them enough to invest. So that's your quick snapshot into the world of dividend stocks. Stay tuned to learn about the powerful magic trick they have up their sleeve. The compounding effect. All right, now that we understand what dividend stocks are, let's uncover the magic trick they hold, the power of compound interest.
Imagine you have a snowball.
You roll it down a snowy hill, and as it rolls, it picks up more snow, growing larger and larger.
That's what compound interest is like.
You start with your initial investment, and as you earn dividends, you reinvest them, effectively adding more snow to your snowball. The best part is the bigger your snowball gets, the more snow it can pick up, which means the more dividends you accumulate, the more you can reinvest. This cycle continues, and your wealth potentially grows exponentially over time. This is why Albert Einstein famously called compound interest the eighth wonder of the world. Remember, if you're enjoying this content, make sure you hit that like button and subscribe to our channel so you don't miss out on more of these financial wisdom nuggets. Stay with us, as we'll be delving into how you can select the right dividend stocks next. Okay, let's talk about another crucial part of investing, diversification. Imagine your investments as a football team. If you only have one type of player, like goalkeepers, your team won't be successful. You need different players to handle different tasks, right? Similarly, with investments, you don't want all your money in just one stock. That's like betting everything on one player. If that company fails, you could lose a lot. But if you spread your money across different dividend stocks, some might perform well when others don't. It's like having a well-rounded team. So, diversifying your portfolio with dividend stocks can help you weather the storms of the market. It's all about balancing risk and reward. Folks, let's continue our exciting journey. Next up, we'll discuss picking the right dividend stocks. Stay tuned. Think of dividends like a good, steady friend. They're dependable and they've got your back. A company that regularly pays dividends shows it's doing pretty well and it's sharing those profits with its shareholders. That's you. It's like a tree that reliably grows fruits every year. You plant the seed by buying the stock, and then you reap the fruits in the form of dividends. But here's the cool part. Even if the price of the stock falls, you still get your dividends. It's like a safety net. Plus, many companies strive to maintain or even increase their dividend over time. So it's not just stable, it's predictably growing. Isn't that exciting? Stay tuned, folks, because we've got more to share about this rewarding investment strategy. Let's think of dividends as birthday money. Imagine every time you get birthday money, a portion is taken away as birthday tax. Not fun, right?
But what if I told you that dividend investing could be taxed at a lower rate than regular income, like your salary?
Yes, you heard that right. In many places, the taxman is kinder to dividends than your usual paycheck. In the US, for example, qualified dividends are taxed at the long-term capital gains rate, which is typically lower than the ordinary income tax rate. It's like getting extra icing on your birthday cake.
So not only are you earning money from your investments, but you're also potentially saving money on taxes.
Make sure to stick around for more juicy tips like this. Remember to like and subscribe. You don't want to miss out on the financial wisdom we're serving up. All right, folks, imagine investing in a company like planting a seed. The company grows, and so does the value of your investment. This growth in the value of your stocks is called capital appreciation.
It's like your seed growing into a towering tree.
But wait, there's more. Remember we talked about dividends. These are like the fruits that your tree periodically gives you while its value keeps growing over time. So with dividend stocks, you get the double benefit, the fruits dividends, and the growing tree capital appreciation. Now, wouldn't you like to have a garden full of such trees? Stick around for more insights into the amazing world of investing. Remember to like this video and subscribe to our channel for more financial wisdom. Don't let your garden miss out on these fruitful trees. All right, let's unlock the magic of dividend reinvestment plans, or DRIPs. Imagine you're playing a video game where every point you earn can be used to level up faster. That's how DRIPs work. When you get dividends, instead of cashing out, you use them to buy more shares of the same company. This way, you're reinvesting your earnings back into the game, helping you level up even faster. Think about our tree analogy. It's as if every fruit that falls from your tree turns into another seed, which grows into another tree.
Before you know it, you've got a whole forest of dividend-bearing trees. And the best part, this forest grows faster and faster with each passing season.
So that's a wrap, folks. We dove deep into the world of dividend stocks today, learning about their stability, the power of compound interest, tax benefits, potential for capital appreciation, and the magic of DRIPs. Remember, investing wisely can open up a world of opportunities, but it's important to do your research and make informed decisions. Be sure to like this video, subscribe to our channel, and keep coming back for more insightful discussions on all things investing. You don't want to miss what's coming next. Until then, happy investing, and we'll see you soon.